and welcome to the monthly equity outlook presented by Centrum. I am Manish Jain, the head of fund management. In the last one odd month since we have spoken, something very interesting has happened. There was a sword hanging over our head for a very long time. Will it happen? Will it not happen? If it happens, to what degree will it happen? Which sectors are going to be exempt? Which sectors are not going to be exempt? You guessed it right, I'm talking about the India-US tariff war situation. And the good part, the silver lining to the whole dark cloud, is that it's out of the way, it's out in the open, we know exactly how it's playing out, and we exactly know what the impact of it is going to be. So that's one thing which is done, it's ticked off, it's being factored into the market, the impact analysis have been done, and the good part is that the larger sectors, services, which is basically essentially IT services, are exempt from it, and amongst the goods part of it, about 50-55% impact. The larger sectors like pharma are out of the way. Three major sectors which get impacted are essentially going to be gems and jewelry, apparels, and then chemicals, in that order. And other than that, I think by and large we are going to be okay. And as an economy, I think we are going to be by and large okay. The good part is that the impact of this is visible in the market. The impact of Q1 earnings is also now starting to become visible in the market. The market has settled into a very good rhythm, right? There is no more uncertainty which prevails in the market, which essentially means 24,500, 25,000, 25,200, that's a broad 500, 700 points range in which the market is playing itself out. And we expect the next 2 to 3 months to be exactly like this. There are certain positives. For example, inflation footprint is coming down significantly. We are at decadal low. We expect that to soften even further if and when the GST rate cuts kick in. That will happen when it happens. Consumption push needs to happen. Everybody is trying to do their best. The monetary policy, the fiscal policy, the government initiatives, everything are coming together to give that push. But I do expect the market to kind of remain range bound, primarily because we are still overestimating the full year earnings growth as far as Nifty is concerned. The broader market is ranging estimates between 12 to 14%. I think 10% is probably a little more realistic. So we need to cut them down by at least 2 to 3%. Which basically means that till the second half comes through, this is going to be a back-ended year. And when we see the festive season upon our heads and that push from consumption sector, especially in the larger sectors like, for example, real estate, autos, leverage sectors, as and when that comes through is when we expect markets to go up. But till that time, markets are going to remain range-bound. And overall for the year, till March, we expect markets to be around 26,000 levels, 26,500 levels, which is basically meaning that a top-down investment strategy at this juncture, and this is something that we've been saying for the last couple of months now, and that's how it has kind of played out a little bit to pat ourselves on the back. Making money is going to be a little tough, right? So you need to have a bottom-up driven strategy. You need to have a very active strategy. If you're going to be an investor who's going to be more focused on large caps, you need to be very nimble-footed, you need to be very agile, you need to take sectoral calls very quickly. Sector rotation is a way to make money. And if you're going to be an investor who's going to be focused on mid and small caps, then it has to be a bottom-up, individual, stock-driven strategy. And you have to try and find the right balance between growth and value. Don't lean either side too much. And when you adopt that and look at a 2-year, maybe 3-year time frame investment horizon, I think the portfolio should do well. There is a lot of money-making opportunities in the market which exist at this juncture. There is hotels, there is hospitality, there are hospitals, there is airline, consumption, discretionary consumption, autos, real estate, so many sectors which we are very, very bullish on. So do not worry, buy when everybody is selling and sell when everybody is buying. Happy investing.